Hi, I'm Michael Ollman. I'm leading the European McKinsey Risk Management Group, and I'm here at Amsterdam at the Risk Minds Insurance Conference 2013. And I'm very happy that I have the opportunity to interview Eberhard Müller. Eberhard is the CRO of Hannover Re and one of the most profiled CROs in the industry, very much involved in many regulatory topics, but even more important so in helping Hannover Re to perform very well. Good morning.
Thanks for the introduction, Michael. Yeah, I'm Chief Risk Officer of Hannover Re since 31 years now. Started my career at Hannover Re as the assistant to the founder and chairman, established the actuarial unit, and from 2006 onwards, following the route of Standard & Poor's and their ERM approach, I'm acting as Chief Risk Officer. Meanwhile, working, you may believe it or not, with 5 departments and 62 people, all of them more or less doing risk management, but with a value creation proposition.
Very good. I think this is an excellent background. Yesterday you were on a panel discussion, and the panel had the question, what are your expectations on the most challenging future risks for insurance companies generally, but also for reinsurance companies?
So for me, there's a very clear answer. We have more or less, at least to a certain degree, mastered the financial crisis. The financial crisis is now more than 4 years ago. We are in some sort of still volatile environment, but not a real crisis. We have some challenges from the euro. We have some challenges from the US budget, the fiscal cliff, but it's not a real crisis. My current concerns are more or less about the regulatory crisis, which has now peaked with the delayed Solvency II project again. And I think, meanwhile, we have unfortunately reached a status where complying with the ever-increasing and now diverging regulatory requirements from different states, we are no longer creating value within our companies by complying with the regulatory demands. We have already reached a phase where complying means destroying value and no longer doing something for your own shop, but just fulfilling regulatory requirements. A couple of examples are there.
Do you think that the regulatory bodies are well prepared to do something with all those tons of informations they will get in the near future, which have to be obligatorily delivered by insurance companies? What the hell are they doing with this information?
That's what I'm asking myself when thinking of the piles of information we are delivering to our group regulator in Germany. The unfortunate thing even is if they are doing a visit on site and you have delivered all the information to prepare them and you ask them, have you digested all those information? Their answer is a clear no. So you're preparing this without this being read by the regulator.
Okay. So are you hopeful that in continuing the communication with the regulators, they will get a better understanding of how much regulation really is needed and where, so to say, just regulation will not create any value added, not only for the insurance industry, but also not for the politicians and for the policyholders?
We need some sort of guidance. Currently there are too many different bodies trying to give the route for regulation. That's IASB, that's IOPA, that's the national bodies. Here I think my hope that IOPA as a European body would and should give the guidance and should a little bit coordinate the efforts of local regulators is postponed because the entire Solvency II project is postponed. It is my sincere hope that there is a political will in Europe to give power to EIOPA, to give direction to the local supervisors, but currently I don't see this. And in the regulatory day we had on Monday, I even heard from the Dutch regulator, the Nederlandse Bank, very clearly they don't care about Europe anymore. They are going their own way. And when I asked him why, they clearly said, we are going to be prepared if Solvency II will not come through at all. So that's the current development in Europe. Everybody is going its own way. And for an international group like Hannover Re, that's a real burden.
So what does this mean for you? You mentioned that you already have 60 people in your group.
Yeah.
Does this mean to be capable to deliver what all these different regulators are asking for? You will increase this group?
We are doing two ways. One is, of course, trying to comply, still on the value creation route as far as possible. By the way, the value creation especially is with the rating agencies. We got our internal model approved by Standard & Poor's that gave us some sort of credit, capital credit, which is worth more than the entire expenses, multiple more than the entire expense of my department. On the other hand, and that's what we can do in our organizational structure for the entire group, we are decreasing the jobs. We just have merged our two Irish companies to one company. We have rebranched the UK life insurance company, so that also eases a little bit the regulatory pressure, because regulators increasingly are focusing on individual legal entities rather than on the group.
If we talk a little bit beyond the risk you are describing with regard to the regulation,
Yep.
I think you have experience in your long time as being responsible for the CRO department, many different kind of risks.
Absolutely.
From natural catastrophes over financial disasters. So looking forward, do you think that the industry is well prepared nowadays? Because as volatility is not decreasing, there will be more challenges out in the future. And are you feeling being well prepared?
I am to say that wherever real randomness still exists, like for natural catastrophes, and where you have tools to assess those randomness, for example, the natural catastrophe simulation models, I think we are good prepared. We are better prepared than ever, because we had a couple of incidents, especially in 2011, the Tohoku earthquake, the New Zealand earthquake, and later on the Thailand floods, which helped us to calibrate our models and to try to get an assessment of this real randomness. Where I don't feel us to be prepared enough is where there is no real randomness. That's everything which is surrounding financial market developments. So the systemic risk, that's something we should take serious, and where maybe in the near future something happens which also may influence the insurance industry to a lesser degree than banks, of course, but here I have my concerns that we are as well prepared as, for example, for natural catastrophes.
Okay. What about risk culture? Can a company like you be prepared for not compliant risk culture levels?
I hope
with,
so.
For example, your customers?
I hope so. Risk culture is one of the buzzwords currently, as we have also heard yesterday here in the conference. And risk culture, and that was the opinion of all speakers, has to go to the brain of the entire organization, to each and every acting person. And what I always tell the audience at Hannover Re, if you have established some sort of framework with the risk strategy, framework guideline risk management, more detailed local guidelines, then you will not create a risk culture by sending around an email and telling in this email it's valid from tomorrow. Please send a return email and confirm that you got it. So that won't work. The only approach that works is you have to travel around, you have to gather the people, you have to talk to them, you have to discuss with them, you have to convince them. Then you get a risk culture established, not by sending around an email. But I think that's increasingly what also others discover when trying to establish a risk culture.
Okay. Eberhard, thank you very much for this very interesting perspectives, and I think listening to you, we can be optimistic and confident in the risk management of the insurance industry.
Thank you, Michael.